Welcome to Stock Review. First and foremost, I want to get the audio set real quick. Alright. Monday, the 18th, 2019, February, week 9, day 49. Time horizon a year ago was the 17th of February in 2018. And I thought, in light of March coming up, in my short trading week, might be smart to go over a few things. Outstanding trading week last week for most of us, I hope. And today was a holiday, so I thought I would dedicate some time to doing a little bit of technical analysis. And this is what I came up with. I want to say, at this point, you see a picture of Obama and Trump on the wall, along with the family there. This show is not politically motivated whatsoever. And because it's a holiday, and it's President's Day, and since I worked today, I have two jobs by investing, and I work for a company called FHI. It's owned by Chinese. It's here in Fort Worth. Matter of fact, the show is being broadcast to you from Fort Worth, Texas. I'm a California native and just got tired. Got tired of the political situation there. Not that I'm against every Democrat that I see, but generally I have conservative policies in my lifestyle. I'm very conservative. But as you can see, the reason why I'm mentioning, and I'm going to enjoy this Guinness while I'm bringing this to you, we can just call this the beer of the week. Cheers, happy President's Day. Okay, now we've done that. I would like to bring to you what's on the Federal Reserve private bank calendar. And what we have is on the 19th, which is tomorrow, commercial paper at 9:45 a.m., or I like to call it ante-meridian. Number 2, we have a H10 foreign exchange rate at 10 o'clock a.m. and H15 select interest rates at 4:14 p.m. And for Wednesday, the 20th, number 1, we have a commercial paper at 9:45 a.m. Second, we have a FOMC minutes at 2 o'clock p.m. and an H15 select interest rates at 4:15 prime meridian. And on the 21st, Thursday, we have a commercial paper at 9:15 ante-meridian, at H15 select interest rates at 4:15 prime meridian, and we have an H3 aggregate reserve of depository institutions and the monetary base at 4:30 prime meridian. We have an H4.1 factors affecting balances for 30 prime meridian, and the 8.6, which would be number 5 publishing of the day for the Fed, which is 8.6 money, stock, and debt measures. And on that Friday the 22nd, we would have a commercial paper at 9:45 a.m., monetary policy report at 11, anti-meridian, and we got a speech from the vice chair at 12, prime meridian, and a discussion from the vice chair based upon the future of the Federal Reserve's balance sheet. That would be at 1:30 p.m. and H15 select interest rates at 4:15 p.m. and H8 assets and liabilities of commercial banks in the U.S. That's the one I'm gonna watch all these. You can subscribe to their YouTube channel. The Federal Reserve has a YouTube channel, and instead of listening to people talk about the Federal Reserve and what they're doing, I want the Federal Reserve word. I want to get the word from the horse's mouth, even if it's tainted or politicized. I want to hear the other side of the story and the reaction in the market for myself. And before I get started, it seems to me that the more technical I get here at Stock Review, the less views I'm getting. That does not bother me. It's been my quest to be a professional show. I mean, in my own way, you know. As far as the information that's being disseminated from Stock Review, I want it to be as accurate as possible. I know I make mistakes. I make mistakes in every episode. But I've made a lot of good predictions, and this is what we want to keep going. I predicted that the market would be in a semi-rally mode up until the second quarter, and that's exactly what happened. Some of my shows have been reactionary. Some of them have been I want to come up with my own word, but I mean pre-preparatory, meaning before it happens. So, with all that said, let's get started here. What's going to be the topics of the Fed discussion from the vice chair? I know we have a lot of events coming out of the Fed that have to do with interest rates, which they've said they weren't going to raise. But let's see why. Why are these dynamics happening? Are you happy with just, the Fed's not going to raise rates, let's go trade? Is that really, where you're at in your trading? I'm not there in my trading, because to every upside there's a downside. To every downside there's an upside. This is what we do. So I'm really into just getting to the nitty-gritty of what's going on. So let's get to business. Have a little fun with this, with the charts at the end. Maybe a small intermission like the last episode. And this is all pre-preparatory for a awesome 4-day trading week. I think the short week presents some challenges. And because it's a short week, the cycle's a little bit different. If you trade every day, you realize Mondays are slow. Fridays at the end of trading, sometimes extremely busy, sometimes slow, depending on what has happened throughout the week. So let's prepare ourselves for this and not get taken away by the holiday or political events or doomsday YouTube channels, and let's really analyze this. I'm going to start from the top. Is the control of inflation a hot topic with the Fed? Question number one. March 6th is when the Beige Book Summary will be published. Some time ago, in late 2018, I predicted an inflated market, and we are way into the first quarter. That's totally come true. This inflation has been controlled by the issuance of debt as of the 19th of January. The trading volumes are. Now, what we're going through here, my friends, is the actual trading volumes of the bonds itself. And I think it sheds a little light on things. Number one, Fannie Mae, 2018, 0.7 billion. 2019, 0.6 billion. A change of negative 11.4%. Number two, FHLB, 2018, 1.7 billion. 2019, 1.7 billion. They listed it as negative 3.9%. You know, maybe those are just roundabout numbers. Then they put the percentage change on the end of that. But that's what's recorded by the government. Number three, Freddie Mac, 2018, 0.6 billion. 2019, 0.5 billion. A change of a negative 16.9%. And all the other bonds, which they just grouped in other two, 2018, 0.9 billion. 2019, 0.9 billion. They listed it as a change of negative 1.7%. A grand total of negative 6.2%, down from last year. That has reflected in the market. I can tell you that even though I had just started trading in May of last year, March and May, I can tell you that things are substantially different. And let's go on. I'm sure that the recent large purchase of treasuries by China has a lot to do with the lessening of tariffs and a U.S.-China trade deal. Furthermore, Congress reluctant to yield to the Trump policy of overspending on a border wall, which could cut immigration by what number? Who knows? Immigration into the U.S. is about 11 million a year and is a major factor in U.S. growth. Economics, as I outlined in previous videos, Global 3.0, Industrial 4.0. Please see the transcripts. The current administration needs to sell debt to keep inflation in check. Currently, the Fed is negative 6.2% off of its 2018 mark. And that is why I was able to take advantage of inflation. A little known fact is excuse me, I mean, hopefully everybody knows this. Just little known fact is why the economy crashed in 2018. And the answer is because China had a massive sell-off of U.S. debt. So what can we take from this? The Fed rather sell debt than raise rates. If the Fed can't sell debt, it will raise rates. On the other hand, China must sell its products to the U.S. to keep its economy going strong. Companies that have suffered under the current environment will get a boost in share price through increased productivity, able to operate under lower costs. China is leading the way in green energy and efficient factories, while the U.S. is pushing fossil fuel, or better said, the petrodollar. The current administration's policy means well, but isn't well thought out. The best way to approach this is with balance, and I think the current administration has found this out the hard way. What a learning curve, ladies and gentlemen. The bottom line, what can we expect in the marketplace in the next quarter? Number one, an increase in the NASDAQ. Number two, a healthier Dow Jones. Number three, a S&P that is less volatile. 4, gold and silver back to its historical highs. Gold at $1,400 an ounce and silver at $23 to $25 an ounce, along with higher commodity prices, gas, oil, along with the dollar at 96 to 97 and perhaps 95.50. Summary. The only way out of this cycle isn't isolation, but to revolutionize the economy. June 6, 2006, ESN was at an all-time high due to an inflated market. If you want to know what they do, you can look up the ticker. We'll probably go, and you can go to the last show. If you've been following this, you'll know what I'm talking about. During an inflationary period, NGD was at an all-time high, which that's new gold. That's on MX. ESNC is we'll look it up later. I have an idea that they are off-grid power developers. They develop off-grid power generation and power storage, and all the infrastructure that goes along with it. Due to the lessening of EPA restrictions, MANGA has suffered. And as you can see, you see a chart there with MGNA. What they do is, they do a lot of things, but basically what they do that no one else does is they make, out of waste, they make a certain kind of fuel that burns, that reduces hydrocarbons. It's not the main fuel that powers or generates energy, but it is mixed in, and it is used to help burn that coal or whatever fuel you're using. It brings it to a higher temperature and burns off more of the impurities. And the best way to explain it is, if you've ever lived near a refinery or been around a refinery, and at night you see those blue flames. If it wasn't for Magna gas, is what they call it, and there's Magna 2, and there's a whole bunch of other things that they use, it would be red, which would be burning off a bunch of impurities, but the flame you see is blue, and just like making flambe in sauté. You see a red flame, they're not using pure alcohol. I usually, when I smoke something like salmon or something like that, I use a real fine vodka, and very pure vodka like Belvedere Grey Goose, and there's just a blue flame. Very pure. Same concept. 2016 and into the current time frame, Magna, MANGA, was over $100 a share to $50 in recent times. Magna is a long play for me, and that's how I'm approaching this position. for at least for my energy sector. Even if emission concerns are not your cup of tea, if there's any movement towards bringing back EPA standards, this stock will go higher by 1,000%. It's traded less than $1 now. In 2016, it was over $100. And I'm not even at liberty to say, you can go look at it yourself. It was way over $150 a share. So really, EPA restrictions really hit this guy hard. Sky Solar really got hit hard by the tariffs. These are some charts. This is all going to be on the transcripts. You can go look and verify what I'm talking about. AMARH suffered at the height of the tariff scare. When market liquidity dried up, cloud banking services suffered due to slowing of debt acquisition by our trading partners. AMRH stock basically fell off a cliff. I hold these holdings. I'm long on them because I know that I get into political things on the show. I know they have a factor in trading. So I'm poised for things to change. During the past trading environment, AMRH was much higher. To summarize, if the current trend continues, DRV should balance out with, this is supposed to be DR, and let me go ahead and I always have some corrections to do live, right? One inverse and the other reflecting the upside of the market, both at 200 to 300% or more. DRN is kind of inflated right now, but as we go into a deflationary period, it should reflect the true cost of real estate a little bit more accurately, and that goes along with the inverse DRV. It should balance out a closer representation of the real estate market. One thing I'm not sure of is if the Trump administration planned a bait and switch. The Democrats sure gave Mr. Trump a way out. Stay tuned for segment 2. Hello and hello. Welcome to segment 2. I thought it would just be prudent to take you through my Q Alpha, so we can get fresh in our minds, sort of kind of what happened last week. I'm not going to really say too much. These are agriculture ETFs, and as you can see, they're both on the upside. Dow Jones bullish ETFs, as they pull up, very interested in what we got going on. Van Eck Vectors, short municipal, not down 1%, but pretty much reflecting what happened in the market. ETF Dow Jones Bear. Take a look at this. Anything short is short, my friends. That is true. I like to go through this to see if the calculator is correct. Global investment bonds. I'm thinking they're really high, really doing well at this point in time. We'll find out right now. Do I believe my own BS? 7-10 year, not doing so hot, even though it's only down, 10 hundredths. BNDX down 500ths. The 1 to 3 is down 0.05 of a percent. Bond market ETF up 3. But here we go. This is the story. Total world bond ETF is up, and the 20-year is up. So what is the world doing? They're investing in 20-year bonds. They're investing in America for the next 20 years. And maybe that's how long that trade deal, is based on a 20-year deal. Maybe that's why Trump held out. He didn't want a 1-year, 2-year deal. He wanted a 20-year deal. And that's exactly what they did. They went in and bought 20-year. Triple Q down. NASDAQ bear. Yeah, not a good play. S&P bull. I think it's mixed. Gotta be mixed. No doubt about it. Okay, I only have one on there, and I think I've answered my own question on what position I want to take in the S&P. Hold on. I'm going to look at it a little bit deeper here, guys. SPYB. And I think this can solve my S&P problems. I can go on and no chart available. Hold on. I can still get some numbers. Alpha is yesterday's news. They're not a trading app. You just get information and stuff like that. Yeah, we understand what ETF is. Okay, see what's going on in the return area. 52-week range, 25 to 31. It's at 30, 21. So I'll be looking to buy this later in the week. Depending on what happens. A crazy man would only buy this right now. Excuse me. And we got tech companies, U.S. currency regime here. I only break them down to in market form. I have them in pre-market form here. When I take it to my Webull trading app, this is just my calculator. They're totally broken down into market segments and also broken down into asset class. So if I'm doing energy, it's energy and technology mixed together. No, actually, I'm not telling the truth. If I do energy, I do one market. If I do technology, I do one market. You know, sometimes I mix and pick and sort of kind of have a company that does energy and technology. But I do that, but I don't do it with biomedical companies. Anyways, U-Bot. Technology doing quite well. And this is my point. Avenue Therapeutics. Go scoop up 100 shares of that. No, I just FireEye, Aware, all these guys down at the bottom. There's AMRH. I hold that at the very bottom. Well, I'm a smart cookie. Take the other side of the trade. U.S. Energy. See what we have going on here. There's my solar right at the top. Was way below, under $1. In a couple hours, it went up by 100%, over 100%. There's my ESNC at the very top. Then, once again, the other side of the trade at the very bottom, my MNGA Technologies. And that's the way I want it. I don't want to be in the middle here, guys. That means you bought at the wrong time. Clearly. I'm selling here and I'm buying there. So, what are we doing? Buy. And I like these stocks. I can buy enough to where I can hold some, buy some, sell some, buy it back, sell it again. But my point in all this is they're not going to stay there forever. And I have, you know, if I'm speculating, let me speculate a little. I think trade concessions with China took some doing. I mean, I think some people went and talked to the president and said, you know what, there's a bunch of companies getting ready to go under. I mean, you got stock prices of high technology companies that are less than $1. 2 years ago, they were running 200, 300 a share. I mean, it doesn't take a genius to figure this out. That pressure, they put pressure on President Trump for good reason. There's no reason why a high technology company needs to be delisted for a trade war that is not well thought out. And there's your renminbi. See, and why the dollar is down, the renminbi's up. But that's false. If the renminbi is such a strong currency at 44.90, why did China buy a bunch of U.S. debt when they should have put the last nail in the coffin? That's because they can't. Wisdom Tree Balance Income ETF, as you see, doing well. iShares China down. Very simply put. Asset class metals, still recycling companies pegged. Hold on. Let me get this back. Asset class metals steel recycling companies pegged to the U.S. currency regime wholesale multinational corporations. For me, that's a whole different animal, and that's why I worded it like that, and that's why it's like that. And we'll see what I have listed there. And there should be no red here at all. Schnitzer Steel Industries at the top. Still at the top. Imagine that. Sandstorm Gold Miners. Number 2. Alvenergy Corporation at the top. CNX. Aluminum. How is aluminum beating out gold or up there with gold? Wow. FCX, Freeport McRam Inc. Another metals company. I'm curious to see exactly what metal they deal in because they beat silver miners. No chart available, but we can get more data description here. Copper, gold. Guys, right? Iron ore, copper, gold. So they're the guys that sort out the junk gold. They don't just go for pure gold mining. They separate it and do what they do. Pan American Silver, we know what they do. New Mining Corporation, we know what they do. CMC Metals is probably steel, if I remember correctly. On and on and on and on. And at the very bottom, we have people or companies. I'm sorry, not people. Or people or corporations nowadays. You have the guys that either mine it or turn it into something, fabricate something out of it. And then at the bottom, look what you got. New Gold Inc., one of my picks. Why didn't I go for sand? That may have been a tactical mistake on my end, being overzealous with trying to take advantage of inflation, but my point is this: it's traded on a different exchange, and that might be a more true reflection of really what's going on. I expect this to go higher. So ultimately, I expect NGD to actually start selling contracts. Let me explain to you what's going on. New Gold Inc. Chart data. What we got going on? They are gold miners. They're out of Toronto, Canada. That could be the reason why they're not up there with Sandstorm Gold. I'm going to take a look at this for myself. This may be a clear mistake. Live on YouTube. I don't care. We're really going after the nitty-gritty right now. Okay. New Gold is actually a mining company. Sandstorm Gold engages in acquisition of gold and other metals. So they buy them after they come out of the ground. They're also in Canada, so we can't blame Canada for this. But what we can blame is the higher fuel prices may have affected New Gold. Sandstorm Gold doesn't have to deal with gas prices or just fuel prices to dig it out of the ground. So eventually, New Gold is going to rise up because of just pure blowback. It could be contract lag, meaning they haven't received their profits yet. So New Gold's a long play for me, and if Sandstorm Gold is doing well and they acquired a bunch of gold from New Gold, because of the price change, gold is up slightly. Because of the weakening dollar, it's going to take time for that to reflect to New Gold, which are actually on the ground, pulling it out of the ground. So they haven't received their paycheck yet. Just an analogy. Not worried about it. But on the other hand, I expect them to, while things are going bad on the other side of the trade, I expect them to have a little lag and hold on to that trend a little bit longer, and then I just might roll around and buy some Sandstorm Gold and hold both of them. I have money. I'm at 50-50, about 50-50 right now in my trading account. 50% in exposure. I can move any which way I want right now. And that's the way I want it. Nothing near commercial real estate. Commodity ETFs. You just got done talking about commodities. But then I have a whole special section for that. Anything dealing with oil is up. Velocity shares, gold ETN, inverse should be down. Short natural gas, down. Ultra short oil, gas, down. Anything short is down. If you are short, you are down right now. I jumped in short, but I jumped in smart short. Communications, let's take a look. Looking good, as you can see, looking good. I'm trying to rush through this. Drug company ETFs. To rephrase that. Sometime I go over these and rename some of these. Everybody's up. Aetna, Walgreens, CVS. Financial sector, which I'm lacking right now. Oh, actually, I'm not. I'm into internet cloud banking. Thank God. Because I think Deutsche Bank and a few of these guys got hit. Oh, Deutsche Bank, 880, pretty much what they've been traded at for the last couple of weeks. Synchrony, Third Bank Corp, Regional Banking ETF, even Barclays had a run. A lot of this here is very tricky. I'll be happy with my internet cloud banking, even though I like Deutsche Bank a lot. But they've had some recent events that popped up. I haven't checked in on it yet. I was busy doing this here. It just seemed to be more important. But I definitely will get to that. As well as the Winston-Salem and SunTrust merger. I'm really trying to pick what side. Is it Winston-Salem or SunTrust should I get in on? And basically, how am I going to capitalize off of that merger? Labor market. Let's take a look. It's up. To be expected. Real estate bull ETF should be down. And it's not. And that's the whole point of the deal, is that the real estate market is inflated, and all of the reports show that it's down. So hopefully with the evening of the dollar, a weakening of the dollar, we'll get a more better representation of what the market is. Even though that's a 200, 300 inverted, or not inverted, but let's go take a look at what they call it. Just for a second, I forget the term. It reflects 200 to 300% more than what the market value is of the actual stock. It's a derivative. SRS, ultra short real estate, down. Like I said, anything short right now, it's down. And it seems funny to me because the beige book and the end of the trading cycle is up in early March. So I'm thinking after the 6th of March, go short. And get a long signal somewhere between that and mid-March for the rest of the trading, for the rest of that quarter. Ford is up almost $9. Wow. XRT, retail ETF. I just buy eBay. Even though it is slightly down, but in a bear market, eBay performs. eBay just stays there. People are using eBay. GM is up. They announced some kind of reorganization again. Let me take a look at that. None of these numbers have anything to do. Mainly, what they have to do with is inflation, which is going to be one thing you're going to see in the rest of this trading quarter and into the next is that the dollar is going to continue to go down because the Fed is trying to sell debt because they don't want to raise rates. If that continues, then we're going to see a lot more of this. And I have a pretty good feeling that the Fed can control inflation if they get buyers for the USD. The issue is the Trump administration going to play ball? And it looks like they are. With not wanting to raise rates, and they're willing to do anything not to raise rates, even make concessions on a wall, even make concessions on the tariffs. Let's continue. Shipping companies. Invesco Shipping ETF, something I've been trying to get in for a while, but I can't get anybody to sell to me. And I'm not paying more than what the market cost is. CSX Corporation, doing well. I'll just buy my time. A lot of these guys don't want to sell. If you do trading, active trading, and you try to buy at the wrong time, you'll be sitting there. There's a lot of hardcore traders out there that just won't sell. Southern Copper, this is all U.S. currency regime. I got a couple of double guys there. I think we already looked at this. U.S. currency attached to the yuan currency regime. Alibaba, damn. Oh, that just makes me want to cry. Anyways, Carter's is baby clothes and stuff. That's a strong company. If you look at my last segments, I was totally just really bullish on anything 40-something million children born in the United States, with 11 million newcomers this year. Can't beat that. US dollar bear ETF. We already know what that's going to be. I hold it. It is up. Let's move on. US dollar bull should be down. Don't hold it. What if they're both up? It's only down 0.05 hundredths. 19 hundredths of a percent. I think this is telling us something. I think this week is going to be more balanced than last week. I think the swings are going to be a lot more predictable than last week. Last week, I don't think it was predictable at all. VVIX, short-term futures, zilch. VIX, some reason on Webull, VIX is delisted. VVIX short-term futures, both of them are short-term. Mid-term futures, Nixon, they're all just discombobulated. The CBOE. I'll have to tune into one of their explanation broadcasts on YouTube and try to get a better fix on what's going on. It's about time to conclude this. I appreciate you tuning in to Stock Review. I don't hope this was informational. I know it was. These are the applications. These are the trade ideas. These are the stocks. I appreciate you for tuning in.